Welcome to the Connecta Homebuyer Workshop. Our workshop is designed to help you navigate the home buying experience by keeping the process simple and classy. Remember, you can pause the video at any time. We hope you find the information helpful and reassuring. So let's get started. Purchasing a home is a pretty big deal, and at times a little confusing. That's where we come in. We're here to help keep the process running smoothly, convenient, and most of all, exciting. As a not-for-profit credit union, we do not answer to shareholders. We're here to serve as our members' trusted financial partner, not just another place to transact. As a potential home buyer, you will be happy to know that we're a local lender and all operations are in-house. We've been a local lender serving the South Bay in Southern California since 1940. Owning a home has numerous benefits, including tax advantages, building equity, pride of ownership, design control, and being your own landlord. Research has indicated that homeowners statistically have higher net worth than renters. Most likely, you'll come up with a few personalized benefits as well. The home buying process is comprised of 6 general steps. Finances, figuring out your mortgage solution and gaining pre-approval, selecting a real estate agent, finding a home, making an offer, and closing on your home. During this time, you'll also want to determine an insurance package that is right for you. As we mentioned earlier, all our operations are in-house, including Connective Financial and Insurance Services, also known as KFIS. A KFIS representative will be able to review your needs and work with you to develop a custom insurance portfolio. Your mortgage loan consultant will be able to refer you to a KFIS representative. The process can seem daunting, but with the right guidance, it doesn't have to be. Our goal at Connecta is to guide you through the home buying process while making it simple. Preparing and understanding your finances is the first and most important step in the home buying process. We recommend that you carefully review investments, savings, credit, income, and debt. Any financial institution will review all assets to determine the loan amount they will approve. Here are a few guidelines to follow while securing your loan. Avoid major purchases, like a car. Have proof of your own down payment source. Avoid changing jobs. Keep paying your bills. Everyone's comfort level about what they can afford is a little different, and that's perfectly fine. Some of your goals may be to have the largest house possible, and you may be willing to have a higher payment. Others may want to keep their payments down as low as possible with the primary goal of being a homeowner. Make sure you are honest with yourself. We suggest you discuss with family and/or friends in detail to really determine what your needs are. Your credit report will be pulled during the process to help determine the rates and terms of your loan. The earlier you can pull your report, the better. This way you can understand what your lender will see when you apply for a loan, and you will be able to address any errors before it impacts your loan amount. There are many ways to request your credit report, including free credit reports online. FICO is a representative score addressing many aspects of your credit, and differs depending on the source. When reviewing your finances, you should start thinking about your down payment, as most loans require one. Down payments are generally 20% of the appraised value of the home. There are mortgages with lower down payment options. These will generally require private mortgage insurance known as PMI. As a borrower, you will cover the expense for the PMI. A few things to keep in mind about your down payment. Keep your money in order and disclose where the funds are coming from early in the process, as they will need to be verified and sourced during the closing. Once you've selected the appropriate loan, it's time to gain pre-approval. Getting pre-approved on a loan can give you an edge by showing you're a serious homebuyer. Connecta's pre-approvals are completed by an underwriter, so you can be confident of your ability to qualify. When you're shopping for a home loan provider, please be aware that other lenders use pre-qualifications and pre-approvals interchangeably. So ask the important questions, as these two items are not the same. A pre-qualification is a cursory review of your finances and does not provide you with a credit approval. If any aspect of your application changes during the process, notify your loan consultant, as it may affect your pre-approval. Since purchasing real estate is not something you do all the time, it's important that you work with someone who does. Through our Home Advantage program, we can connect you with a network of hand-picked, top-notch local agents, because you can never have too many perks. Not only will you be connected with real estate agents, you'll have access to many advantages. And did we mention it's free? What are you waiting for? Jot down this phone number to enroll today, 855-889-1824. That's 855-889-1824. Before you head out to find a home, it's important to prepare yourself by knowing what you need versus what you want. In order to find the right house for you, it's imperative that you are candid about your present and future needs. Make sure your family is realistic with their non-negotiable items, like bedroom and bathroom counts. It's important to include all family members in the discussion. You should also determine if you need a move-in ready house or if you're willing to work with a fixer-upper. The more planning you do ahead of seeing houses, the more efficient and enjoyable the process will be. So you found your house and you're ready to make an offer. Now we're getting to the good stuff. During this time, your real estate agent will go over key dates and next steps to help you craft the best deal for you. They will prepare the documents, make them official, and present them on your behalf to the seller. Often, your offer will include contingencies. These are terms and conditions that are put into place for both the buyer's and seller's protection. All contingencies will need to be met by the closing date. Some contingencies can weaken an offer, but most contingencies, like a home inspection, are expected. As you and your real estate agent determine the closing date, we recommend that you set your closing date before you have to be out of your existing home. This makes for less stress and allows time to make the decorating choices before you move in. In order to have your offer accepted, you'll need to work with your real estate agent to determine what will make yours most appealing. Most sellers will have needs other than price you can identify and address, i.e. shorter or longer escrow period. Be prepared for a counteroffer, as everything is negotiable. Counteroffers can range in how long it takes to come to an agreement, but your real estate agent will be able to provide guidance as to when you should accept or walk away. When you write an offer, you will generally provide earnest money. Earnest money is a deposit that is held by your real estate agent until the offer is accepted. Once accepted, it will be applied to your down payment. Your initial deposit could be at risk once all contingencies are waived, so make sure you understand the important dates for closing. Once the seller agrees to your offer amount, you have entered into a contract and are just a few steps away from becoming a homeowner. The escrow period is the time it takes to transfer a property from one person to another. This is started once the seller has accepted your offer and earnest money deposit. The seller will usually dictate where they would like escrow opened. Once it is opened, the escrow agent will work with the various parties, like a title insurance agent and your closing agent. During this time, they will determine if there are any issues with the title of the property. During escrow, you should be preparing for closing. Review all closing documents and ask questions in advance. Ensure you have secured your homeowner's insurance and have proof of the policy. Talk to your mortgage loan consultant a day or two prior to the closing to learn the final dollar amount needed to cover your down payment and closing costs. Part of preparing for the closing date is ensuring that all the contingencies are met. If for any reason the contingencies are not met, there are controls in the contract that were established to protect your earnest money deposit. If you requested a home inspection as one of the contingencies, it will take place during escrow. It is highly recommended that you are present during the home inspection, as sometimes there are issues raised that are not noted in the report. At the same time, an appraisal will be completed on your new home. The appraisal is a formal market evaluation that compares the subject property with other recent similar sales. Once the contingencies have been met and the appraisal has been completed, the loan documents are prepared and sent to escrow for signing. Escrow takes the final step to prepare a new title and deed for closing. Time to start planning for the celebration. On your closing day, you will have a closing meeting. At the meeting, you'll be asked to verify you have homeowner's insurance and sign each closing document. Please note that the process shown is the process in California. Closing process will vary in other states. Congratulations! You've made it through the home buying process. We think you'll agree. Homeownership is a good look for you. Thank you for watching the Home Buyer Workshop. We hope that you are excited about all the possibilities ahead.